I want to show you how to file your tax return for free using Wealthsimple's free online tax program. So let's dive in. Hi, my name is Janine Rogan. I'm a financial educator, CPA, and author of the best-selling book, The Pink Tax. I am on a mission to teach women how to invest and build their wealth so that they can live their richest lives. Now, tax season is upon us, so I thought I would go ahead and share my screen and we can dive into everything you need to know when it comes to filing your tax return online. All right, so here I have a tax return for an individual. I've named her Jane Doe, and I've gone ahead and made up a social insurance number, so none of this is any personal information, but you'll notice that you need to include all of your personal information anywhere that there's an asterisk. So things like your name, social insurance number, language, and of course, which province did you reside in? I'm gonna go ahead and pick Alberta because that is where I live. But of course, please pick the province that you lived in on December 31st of 2025. Now, you do have the option to import a lot of forms from the CRA, which is a great place to start, especially if your employer has uploaded those forms or your financial institutions have done so. You'll be able to do this and it will automatically bring those forms in so that you don't actually need to type any of that information in. Of course, you're going to want to include your mailing address, phone number, and whether or not you were a resident. If you are in a common law relationship, which by definition of the CRA is living together for 1 year or more, you're going to want to make sure that you include that. I'm just going to keep this as a single person because it will be easier. But you can link those tax returns, and the Wealthsimple program will absolutely help you when it comes to determining who should be claiming what deductions. If you are interested in learning all about every deduction that is available to you federally in 2025, go ahead and check out this video here and you can learn more about that there. Now, not all of these questions are mandatory, but one of them is, and that is around foreign specified property. And this includes things like shares traded on US exchanges, which I think a lot of people forget. And a lot of people think that this is just going to be houses and foreign property, but it does include investments that are traded on US exchanges. So example would be if you own Apple shares outside of a registered account, then you're going to want to include that in your total. And if you exceed $100,000, you may need to file what we call a T1135. And it is an informational form that gets sent to the government. And if you don't do this, the penalty is actually quite steep. It can be up to $700 per form. So again, if you are over that $100,000 limit in foreign specified property, you're gonna wanna make sure that you file that form. If you sold your home in 2025, you're gonna want to make sure that you include that in your disclosure to the CRA. You're not taxed on it, but it is important to include, as well as if you had a first-time home savings account or flipped a property, you're gonna wanna include that information as well. If you're not signed up for CRA online mail, this is gonna be something that's super important. It is a great place to be able to see where your tax return is, how much you potentially are getting back, and it is a faster way that the CRA can correspond with you should they need any further information. You can also add in forms from previous years, which is great to compare if your situation has not changed dramatically. As we come down, you can also see that there is the ability to add tax forms in. So if I have a T4 for employment income, I'm going to want to go ahead and add that in. If I have a T3 for income from a trust, or a T5, which is investment income, I'm going to want to go ahead and put all of those in. You should have received all of these forms by now, and you can check the CRA online to see these forms as well. Other things you may want to consider is work from home expenses. That is the T777. If you had any education expenses, you might have a T2202. We'll want to include that. Of course, any interest paid on student loans or carrying charges that you paid in investment fees, including to a financial advisor, for accounts outside of your registered accounts, you can go ahead and add those in. Additionally, if you sold any investments outside of any registered accounts, so again, your TFSA, your RSP, your RESP, your first time home savings account, you're going to want to include those capital gains and losses. And of course, things like donations, political contributions, medical expenses are all things that you're going to want to include in your tax return if you have those available to you. You can also scroll through the list that Wealthsimple has and add things that are applicable to you. So whether you have professional dues or union dues that you paid during the year, those can be included on your tax return. You may also be self-employed or have another side hustle and stream of income. I'm going to do another video on just that. And so you can go ahead and choose the 2125 if you have that additional income. It is really important to pull your notice of assessment and see if you have any unused deductions or contribution limits to update in the year. So make sure you're doing that, because there can be things that you can carry forward, like losses from a previous year, that you can again then deduct against capital gains. If you own a second property and you have rental income, you're going to want to make sure that you include that on your tax return. That is income that absolutely needs to be reported. And as a reminder, we do need to report all of the income we earn in a year. In Canada, we are taxed on what we call worldwide income. So that is income from any source around the world if you are a resident of Canada. If you have a child, you want to include information about that child on your tax return so that you can qualify for the child tax benefit, as well as claim some of those expenses like daycare expenses or after school programs or summer camps. Boarding schools also count. You're able to claim those on your tax return as well. As you can see, there is a lot of different deductions that you can claim, and going through the list at a high level is a great way to make sure that you're not missing out on any of those credits. So we'll start at the sale of our principal residence, maybe on 123, Bloom Street. We'll need to include the year we acquired it, the proceeds of disposition. So this is the amount you sold it for, and whether or not it was your principal residence or whether you lived there for all of the years that you owned it. And of course, if this property was owned jointly, you're going to want to make sure that you put in the other individual that owned the other half or portion of that principal residence. Next, you're going to want to put in your T4 information. So we'll go ahead and say ABC Co. You only click these if they are checked off on your T4 form. Otherwise, you can just ignore them. We'll go ahead and include some random numbers. So I have no idea what's going to happen here. 5,500 in tax. You may have other boxes. You'll want to make sure that you fill those out as well. If you have a T3, go ahead and do the exact same thing. ABC Trust. And you'll want to make sure that you include the income that is listed on that trust. Again, all of these may be jointly owned if they're investment slips, so you'll want to make sure that you allocate that appropriately. This will be to include all of your dividend income that you have outside of, again, those registered accounts. So you don't get these slips for registered accounts. When we come down to employment expenses and work from home, you do need to make sure that you have that T2200 signed by your employer should the CRA ask for it. And you're going to only be able to claim this against income that you actually earned. So we'll go ahead and make up, let's say this is a 1,200 square foot house and the home office is 200 square feet. You'll want to make sure that you go ahead and add up all of your bills for the year. So that could potentially be electricity, heat, water, home internet. Let's say we paid $3,000 for that. Maintenance only related to the workplace, not your house. And then maintenance related to the entire home. Those are two separate line items. You may also be able to include things like rent. Unfortunately, if you are just a salaried employee, you cannot claim the interest payments on your mortgage as part of this form. If you are commissioned to play, it's a little bit different. let's say we paid $24,000 in rent this year, and we can see that we're actually able, it calculates it all for us, how much we're actually able to deduct. If you had eligible motor vehicle expenses, you can also put those in there. It's pretty straightforward. We're not going to do that in this example. For tuition and education amounts, if you're not in school full-time but you were recently in school, you'll want to check that notice of assessment to see if there are any amounts that you were able to carry forward. Let's say $10,000 federally and $7,000 provincially. So we've gone from an owing position to a refund. If we had specific fees pertaining to carrying charges, interest expenses, investment management fees, other investment expenses, and legal fees relating to support payments that you received in the year, you can go ahead and claim those here. Again, these cannot be for accounts that are registered, so we'll just go unregistered. Capital gains and losses, this again is for things that are outside of your registered accounts. I probably sound like a broken record, but if they're in your TFSA or RSP or RESP or first time home savings account, you do not need to include them on your tax return. But if you did sell cryptocurrency or publicly traded company shares or mutual funds or ETFs in an unregistered account or real estate, then you're going to want to include those on your tax return. So let's say we sold Apple shares for $10,000. We bought them for $8,000 and we paid $20 to sell them. We want to include that all in there. Our gain is $1,900. If we had capital losses that we were carrying forward from prior years, we would again be able to deduct those against this amount. Donations and gifts, you can see that there's a variety of different ways that you can include this on your tax return. We'll go DEF, charity. If you're in a relationship, you will want to pool your donations together, and likely you're going to want to claim these on the higher income earning spouse. Medical expenses, these are based on a threshold of 3% of your net income or around $2,300, whichever is lower. You're going to want to claim medical expenses in the lower income earning spouse. These are expenses that you paid personally. You cannot claim amounts that were reimbursed by your insurance. And you'll want to make sure that you check the province you live in to see what expenses you can actually claim. So for example, in Alberta, you cannot claim massage benefits. Here we're down to the rental income. Let's call this 234. On your T776, where you include all your rental income, you're going to want to make sure that you include all of the gross amount of rent that you receive. So maybe you received $20,000. And then of course you're going to be able to claim expenses against this amount. So if you paid interest on your mortgage, this is where you're going to be able to claim that. Let's say that was $10,000. Office expenses, legal, management and admin fees, all of those expenses that go into your property, you're going to be able to deduct on your tax return. So you'll want to make sure that you go ahead and actually calculate that all. If you paid any of the utilities or condo fees, again, all of that is going to go in on this amount. And then you're going to be done your return that quickly. It is very straightforward. Then you're going to hit review and optimize, and there is going to be a number of things that you might want to consider or some things that you're going to need to fix before you actually can go ahead and file that. You can go ahead and work through those. Some of them are just warnings like include an access code. If you don't have an access code, you don't have to include it. And then it will give you some suggestions on things to consider for next year. Then you're going to come down to the optimization section. If you are filing with a spouse, you can decide who claims what and play around with the amounts owing and the refunds. Maybe you don't want to claim all of your donations in 1 year, so you can actually go ahead and override that and hit 0, which changes your tax return by $549. So let's go ahead and put that back in. You do have the ability to play around with that, though. You don't have to just base it off of what is automatically populated. And my favorite part is always looking at the summary of all of the different sources of income and deductions that happened in the year. So you can see there's unemployment income. You're going to be able to take off the loss you had on your rental income, as well as you're going to obviously want to be including all of the capital gains, that you have, and it's going to calculate how much tax you actually owe. And you can see in this situation, this individual has total taxes payable of only $579, and they had income tax deducted of $5,500, which is why they're getting such a large refund. This is largely due in this situation to the large amount of tuition credits this person had carrying forward. We put in $10,000 of tuition credits and $10,000 of medical expenses. So this is not a normal situation, but I did just want to show you an example where we were putting in some of those numbers. You can see that this person is expecting quite a large refund. They're going to qualify for the GST quarterly amount. If they had a child, the CCB amount would also show up here. And then you can scroll all the way down. Once you've reviewed your errors, you can go ahead and submit your return, and it will automatically transmit it to the CRA. So I hope you enjoyed this video, and if you have any questions on how to file your tax return, you can drop a comment in the comment section below, and make sure that you like and subscribe to my channel so that you can get more financial education content, and I will see you next time.